This call is now being recorded.
Good morning, friends. Today we are going to talk upon the subject numerical problems with solutions on gross total income. So, under income tax, we are going to talk about numerical problems with solutions on gross total income. This is Professor S. Ramesh Kumar Mehta from Rajashri Sahu College of Engineering, Pune, MBA department. So let's take up the first numerical problem on gross total income. Mr. X, who is a person with disability, submits the following information for the financial year 2019-20. The following information is provided by him. Salary is 3,05,000 rupees. Number one. Number two, rent received during the year from the host property, which has been let out, is 2,000 rupees. Dividend income from a cooperative society is 3,000 rupees. Interest on bank deposit is 7,000 rupees. Interest on Government of India securities is 5,000 rupees. Winnings from lotteries is 2,000 rupees. He has done some investments, and one of the investments is investment in National Savings Certificate, 8th issue, 50,000 rupees, 15,000 rupees. Deposit in Public Provident Fund is 35,000 rupees. He has furnished some more additional information, and he has earned a long-term capital gain of rupees 78,000 by sale of shares during the year. From the given information, find out the gross total income of the assessee. Okay, so here if we look at the problem, there are salary income, there is house property income, there is dividend income, there is interest on bank deposit, interest on Government of India securities, winning from lotteries, and he has done some investments which are qualified under section 80C, and he has got a long-term capital gain also. So there are here incomes from different sources. So when you are attempting this problem, you have to understand that there are five sources of income. One is salary income, next one is income from house property, the third one is profits and gains from business or profession, fourth one is capital gains, and fifth one is income from other sources. So let's talk about the first one, income from salary. So income from salary is 3,05,000 rupees as given in the problem. So from these, please remember there is a standard deduction uh, which is 40,000 rupees. So 3,05,000 rupees minus 4,000, 40,000 rupees. The income from salary of the assessee is 2,65,000. So this is the first head of the income under income from salary. Second one is income from house property. He has furnished that the rent received during the year was 24,000, and there is no other information relating to uh, municipal valuation or fair rent or standard rent or rent, uh, reasonable rent at which it is the expected rent or reasonable uh, expected rent, and rent received or receivable. So we discard the data, ignore the data, and we just understand that the gross annual value of the house property is 24,000. From that we can deduct municipal taxes. That information is also not there in this particular problem. So the net annual value of the house property is 24,000. Now this is the net annual value. On this net annual value you get two deductions. One is interest paid on loan taken for the construction or purchase of the house property, and standard deduction at a rate of 30% on NAV. So on this NAV of 24,000, the standard deduction of 30% is 7,200. So 24,000 minus 7,200, income from house property is 16,800. So the second source of income is income from house property, and the income is 16,800. And salary, as we have already seen, is 2,65,000. The third one is profits and gains from business or income. So there is no income as such. So this is ignored. Number three source of income is capital gains. Capital gains, we have in this particular problem long-term capital gain of rupees 78,000. So place it in the final column. Next, the fifth source of income is income from other source. So in this case, dividend income is 3,000 rupees. Dividend income is 3,000 rupees. Interest on bank deposits is 7,000 rupees. Interest on Government of India securities is 5,000 rupees. And winnings from lotteries is 3,000 rupees. Sorry, 2,000 rupees. So these are all income from other source. There is a separate video which I have dedicated uh, on all these individual sources of income. You can view all these videos on my YouTube channel as Ramesh Kumar Mehta. So I have dedicated a separate video on income from other source, capital gains, business, profits and gains from business or profession, income from house property, and income from salary. So please get back and view my video on these topics. So the total income from other source is 3,000 plus 7,000 plus 5,000 plus 2,000 is 17,000. So if you total all this 1, 2, 3, 4, that is income from house property, income from salary, or capital gains, and income from other source, the total gross total income is 3,76,800. Now, there are some deductions which are qualified because the assessee has invested some amount. So under section 80C, he has invested in PPF and National Savings Certificate 15,000 and 35,000. So the total amount which is qualified under section 80C is 50,000. Number one. Number two is, as we have already seen in this particular problem, that this assessee is an disabled person. So he said having a disability. So because of the virtue of being disabled, he is qualified for an standard deduction uh, under section 80U, an amount of 75,000 rupees. So total deductions to this under this particular deduction under 80U is 75,000. So 50,000 for 80C and 75,000 for 8 for section 80U. So these two deductions, after you deduct 1,25,000 from 3,76,800, the total income is 2,51,800. So you have to pay tax on that one. So 2,51,800. Please remember, on lotteries, in this case, he has a lottery income of 2,000 rupees. So on this, you have to pay a straight away tax of 30%. So on this 2,000, you have to pay 30%. So after you have paid on this, the income will become 2,49,800. Number one. Number two is, there is a long-term capital gain to the tune of 78,000. But according to income tax rule for the assessment year 2021 or financial year 1920, long-term capital gain is exempted up to rupees from tax up to rupees 1 lakh. So as this income, long-term capital gain income is less than 1 lakh rupees, no income tax is charged. So deduct 78,000. So this is nil. So now the income will be 1,71,800. So this is his taxable income, total taxable income. On this, he has to pay tax. As per the income tax slabs of 2019-20, it is found out that for an ordinary person from 0 to 2.5 lakhs of income, the tax is nil. So he need not pay any tax because it is within the threshold limit of 2.5 lakh rupees. However, he has to pay on this winnings from lottery 600 rupees straight away. So he has to pay 600 rupees. However, he will get rebate under section 87A if the total income is less than 5 lakh rupees, then uh, he will need not to pay a single pice as a tax. So this particular section 87A rebate has been detailed spoken and discussion in. You can view my video on this particular section under Income Tax Act for the assessment year 2019-20. So hope you have understood this particular problem. Let's take up the second problem under gross total income. So in this case, the assessor is furnishing the following sources of income. So he has a salary income to the tune of 8 lakh rupees. Number one. Number two, he has let out the house property and he has earned an income under the house property to the tune of 4 lakh rupees. Dividend income from domestic company is 16 lakh rupees and income from lotteries is 80,000 rupees. Okay, so as I told you in the previous problem that there are five sources of income: income from salary, income from house property, capital gains, business profit or gains from business or profession, and finally income from other sources. So these two are income from other source. This is income from house property and this is income from salary. But this guy doesn't have any income from capital gains, not from profits or gains from business or profession. So let's compute his total taxable income and tax payable. So the first source of income is income under that salary, which is 8 lakh rupees. Number one. Number two is income from house property. So the income from house property is 4 lakhs. Next one is income from other source, and this is dividend income, which is 10 lakh rupees. Sorry, 16 lakh rupees. So he has invested some money in stock market, and these companies in which he has invested has declared a dividend, and the uh, dividend what he has received from investment in stock in companies in from acquisition of equity shares is 16 lakh rupees. However, under section 10 subsection 34 of Income Tax Act for the financial year 1920, up to 10 lakh rupees of dividend income, there is no income tax, or up to 10 lakhs of dividend is there is no tax. However, over and above, it will be charged at a rate of 10%. So in this case, 16 lakh rupees is the total dividend income. So 10 lakh rupees is exempted, and on the remaining 6 lakh rupees, a tax is levied at the rate of 10%. So that is what I have shown. Dividend income is 16 lakh rupees, exemption is 10 lakh rupees, and here the remaining dividend income is going to be taxed at a rate of 10%. Number one. Number two, income from winning from lotteries is 80,000 rupees. So this is income which is going to be taxed, and this is the income which is going to be taxed. So 6 lakhs 80,000. 6 lakhs is the income from dividend after exemption to the tune of 10 lakh rupees, and the income from winnings of lotteries is 80,000. So 6 lakhs 80,000. So 8 lakhs plus 4 lakhs plus 6 lakhs 80,000 is 18 lakhs 80,000 rupees. Now, this guy has not bothered to invest in any under any investment avenues like ATC or ATD, and hence he is not having any deductions under section 82 ATC to ATU, and this is nil. So the total income is 18 lakh 80,000. However, now out of this 18 lakh 18,000 rupees, 18,000 rupees, 80 lakh 80,000 rupees, 6 lakhs is dividend income on which he has to pay 10% tax, which is 60,000 rupees. Number one. Number two, on lottery income of 80,000 rupees, generally lottery income is there, but when the person is paying the lottery income, will deduct tax at source. However, if he's not deducting tax at source, then on this income he has to pay 30% tax. So which is 24,000. 80,000 into 34,000. So till so far we have seen, out of 18 lakh 80,000, 6 lakhs plus 80,000. So the remaining income is 12 lakhs. Hope you have understood up to this point. Now on this 12 lakh rupees he has to pay tax. Let's see how much tax is going to be he is going to pay after doing some calculations as far as this income is concerned. So in this case, his total now income is 12 lakh rupees after deducting 6 lakhs towards dividend income and winnings from lotteries of 80,000 rupees. So let's talk about the computation of tax on this income of 12 lakh rupees. So assuming that he is a guy who is not retired and his age is below 60, so the slabs are in front of you. You can look here. These are the slabs. There is a separate video which I have prepared on how to pay tax, how to compute tax liability based upon uh, the tax slabs. So you can view the video on that particular topic. So in this case, let's do the problem and let's compute how much tax he has to pay on this 12 lakh rupees. So please remember, for the first 2.5 lakh rupees of 2 lakh 50,000, nil, there is no tax, 0%. For the next 2.5 lakh rupees, sorry, 2.5 lakh rupees, next to 2.5 lakh rupees, he has to pay at the rate of 5%. For the next 5 lakh rupees, he has to pay at the rate of 20%. And whatever is excess over this 10 lakh rupees, this is total put together 10 lakhs, whatever excess. So in this case, the excess is 2 lakh rupees. He has to pay at the rate of 30%. So this is the way you have to calculate the first, for the first 2.5 lakh rupees nil, for the next 2.5 lakh rupees of total income, he has to pay at the rate of 5%. For the next 5 lakh rupees of income, he has to pay at the rate of 20%. And for the amount of income over and above 10 lakh rupees, he has to pay at the rate of 30%. So first 2.5 lakhs nil, next 2.5 lakhs is 5%, next 5 lakhs is 20%, and the remaining 2 lakh rupees is to be taxed at the rate of 30%. Now, if you total this 2.5 lakh plus 2.5 lakhs plus 5 lakhs plus 12, 2 lakhs, sorry, it should be 12 lakh. Hope you have understood up to this stage. Now, first 2.5 lakhs nil, second 2.5 lakhs is 5%, that is 12,500. Next 5 lakh rupees at the rate of 20% is 2 lakh rupees. Sorry, 1 lakh rupees he has to pay tax. And the last 2 lakh rupees over and about 10 lakhs is going to be charged at the rate of 30% is 60,000 rupees. So if you total this, the total amount of tax he has to pay apart from this 60,000 and 24,000 is 12,500 plus 1 lakh plus 6 lakhs, 60,000. 12,500 plus 1 lakh plus 60,000, total 1 lakh 72,500. So he has to pay tax of 60,000, 24,000 and 1 lakh 72,000. So the total tax he has to pay is 2 lakh 56,500. He has to pay total tax of 2 lakh 56,500. Next one. So remember, apart from this tax, here he will be charged one more cess, which is health and education cess, to the tune of 4% on this amount of 2,56,500. Now, on this 2,56,500, if you calculate 4 percentage, it is 10,260. So now total aggregate tax payable is 2,56,500 plus 10,260 is 2,66,760. Hope this problem also is clear to you. If you have any doubts, you can get back to me on my WhatsApp number. Now, let's take the third problem. Let's take the third problem and understand the problem, and let's solve the problem. So the problem goes like this. The assessee furnish the following information for the financial year 2019-20, and from this information you have to find out the gross total income and the amount of tax to be paid for the assessment year 2020-2021. So income from salaries 2 lakhs 12,000. Number one income. Number two, he has in house property income, and in this case he is having three houses: house one, house two, and house three. House one, he has an income of 12,000 rupees. House two, he has an income but a loss of 2.5 lakh rupees. House three, there is a income which is a loss of 10,000 rupees, which is self-occupied. So this is the This part is income from house property. Next one is profits and gains from business. He's doing business also. So he's very energetic person and he's doing business. He has two businesses. Sorry, four businesses. Business one, business two, business three, and business four. Business three is a speculative business. Business four is a non-speculative business. Sorry, speculative business. So business three is a speculative business and a loss of 64,000 was registered. Business four was a speculative business and there is a profit of 36,000. Business one is assumed to be a non-speculative business and there is a profit of 8,000 rupees. Business two also is assumed to be a non-speculative business in nature and there is a loss of 12,000 rupees. So this part is over. So this is the third source of income under profits and gains from business or profession. Next one is capital gains. So this guy is also into capital gains, sale of capital assets. So he has sold some short-term capital asset and long-term capital asset. So from short-term capital asset, there is a loss of 6,000 rupees. From long-term capital asset, there is a profit of 5,400. Next one. So this is the fourth source of income. The fifth source of income is income from other source. So he's in the habit of playing cards and because of this he has made a profit of 36,000. He is also in the habit of betting and from betting he has made a profit of 24,000. Last but not the least, this guy is also engaged in the activity of maintaining and owning of horse races and because of this business he has lost some 4,600 rupees. So with this given data we have to find out what is the total income and what is the tax he has to pay. So we have to follow a format. The first format is income from salary, income from house property, income from business, income from capital gains, and income from other sources. So these four heads you have to plant in your format and then fill one by one the sources of income under these heads of income. So this is A, this is B, this is C, this is D, and this is E. And this guy he has not invested anything and he has no deductions under section 80C and 80U and 80U. Okay, let's solve the problem. So the first is income from salary. Income from salary is 2 lakhs 12,000 rupees. Number one. Number two. Now this is number one. This is number two. I will speak about this part later. Now let's talk about income from house property. So for finding out income from house property, please remember there is something called as intra-head adjustment, intra-head source of income adjustment, intra-head adjustment or intra-head set of losses. So please remember, wish to bring to your kind notice that I have prepared a separate video of 1 hour and some 10 minutes on set off and carry forward of losses, and this is placed on the YouTube. You can you can look at this video, you can get a comprehensive idea about set off and carry forward of losses. And set off and carry forward of losses are discussed in under three heads. The first step is intra head, second step is inter head, and the third step is carry forward of losses for the subsequent assessment years. So because of the virtue of set off and carry forward of losses, so please look, house number one has made a profit of 12,000. House number two has made a loss of 2,000, 2,50,000. House number three, there is a loss of 10,000 rupees. So if you put together add, you will find that there is a loss of 2,48,000 from house property income. This is number two. Now remember that under set off and carry forward of losses and under interhead adjustment, this 2 lakh out of this 2,48,000 rupees of loss from house property, this loss of 2 lakhs can be set off against salary income. So out of the loss of 2,48,000 rupees, if you have an income from salary which is more than 2 lakh rupees, then this out of this 2,40,000 loss can be set off against the income from salary to the tune of only 2 lakh rupees. So in this case, the loss is house property is 2,48,000. At the same time, there is an income from salary of 2,12,000 rupees. So please remember there is a golden rule which you have to follow. The loss from the house property can be set off to the tune of 2 lakh rupees against certain incomes. So in this case, out of 2,48,000, 2 lakh can be set off against income from salaries. There is a rule. So 2,48,000 is the loss, and this loss can be set off against this income of 2,12,000 to the tune of 2 lakh rupees. So what I did, income from salary was 2,12,000 rupees, but I set off out of this 2,48,000 rupees as permitted 2 lakh rupees to be deducted. So my income from salary eventually becomes 12,000 rupees, and the loss now has reduced to 48,000 rupees, which could not be set off this year. So this loss can be carried forward for the subsequent 8 assessment years, and you can try to set off. So that is what I have written here. Set off from salary this loss of 2 lakh rupees, and the balance which could not be set off can be carried forward to the tune of 48,000 rupees. So income from house property becomes zero, and income from salary is reduced from 2 lakhs 12,000 minus 2 lakhs to 12,000 rupees. So hope you have understood it. Now next one, business loss. Let's find out income from business. Let's find out income from business, that is profits or gains from business or profession. Let's solve the problem. Now in this case, it is found that there are four businesses what he is doing: business one, business two, business three, and business four. Business one is a non-speculative business, business two is a non-speculative business, business three is a speculative business, and business four is a speculative business. So I will just tell you the rules of how to set off under the intra-head of intra-head business income. Okay, intra-head rules for business income. Please remember that speculative business loss can be set off against speculative business gains only. This is number one rule. Number two rule, normal business loss or non-speculative business loss can be set off against non-speculative business profits as well as speculative business profits. So this is the rule. You have to just remember there is no other way out. So again I am repeating, speculative business loss can be set off against speculative business profits only. Number one. Number under intrahead. And non-speculative business profit, non-speculative business loss can be set off against non-speculative as well as speculative profits under intrahead. So hope you have understood this point. So let's talk about business one, business two, business three, business four, how to do the numerical problem. So business one is a non-speculative business, and there is a profit of 8,000 rupees. However, business two, which is again a non-speculative business or a regular business or a casual uh, ordinary business, there is a loss. So what the rule says that this loss of 12,000 rupees can be set off against speculative business profit. Now the loss is 12,000 rupees, but the profit is 8,000 rupees. So you can set off only 8,000 rupees from this 4,000 rupees. Okay, hope you understood it. So since out of this 8,000, 12,000 rupees, 8,000 is set off. So the income here is up to this stage is zero, and 4,000 has to be carried forward. So business loss which can be carried forward is 4,000 rupees. Number one. So this point is over. Next point. Next point is speculative business loss and speculative business gain. There is a speculative business loss of 64,000 rupees, and at the same time there is a speculative business profit of 36,000 rupees. As the rule says that speculative business profit can be used to set off speculative business loss, or speculative business loss can be set off against speculative business profit. However, in this case, it is found out that the speculative loss is very huge in comparison with the speculative business profit. Hence, that could not be fully set off. So in this case, out of 64,000 loss of speculative business, you can set off 36,000 rupees, and the remaining 28,000 rupees of speculative loss should be carried forward for the next years up to 4 assessment years till it can be set off. So there is an eventually no business income. Next one, fourth one. The fourth one is capital gain. Capital gain. So in this case, it is given that short-term capital loss is 6,000 rupees and long-term capital gain is 5,400. I'm telling you the rules of capital gains as far as the intra-head adjustments are concerned. Under intra-head adjustments, long-term capital loss can be set off against long-term capital gain only. Rule number one. Rule number two, short-term capital loss can be set off against long-term capital gain as well as short-term capital gain. Again, I'm repeating, under intra-head adjustments, you can set off long-term capital gain, you can set off long-term capital loss against long-term capital gain only. Rule number one. Rule number two, short-term capital loss under intra-head adjustments or set off can be set off against short-term capital gain as well as long-term capital gain. Hope you have understood this. So this loss of 6,000 can be set off against 5,400. So I have set off 6,000 against 5,400 profit, but it is not possible to set off the full amount. So the remaining amount which could not be set off can be carried forward for 8 assessment years. So long-term capital gain, there is nil amount, and short-term capital gain also there is nil income. So up to this stage, I think you have understood. Now let's look at the last source of income for this assessee. The last source of income is the last source of income is income from other source. So income from card games is fully taxable. Income from bettings is fully taxable. So the total income in this case is 64,000, 60,000, 36,000 plus 24,000. Generally, it so happens that when winnings amount is distributed and betting amounts are distributed among the winners, they generally deduct tax at source, and then the remaining amount is placed in the hands of the winner. But in this case, I'm assuming that they have not deducted tax at source, and this hence because of this reason, it is fully taxable to the tune of 60,000 rupees. So this is number one. Number two, income from other source. However, at the same point, it is found that the assessee has sustained a loss of 4,600 rupees from the activity of owning and maintaining of horse races. Please remember, under the intra-head adjustments, for in particular loss on maintenance, loss from the activity of maintaining and owning of horse races, this loss can be set off against profits or gains or incomes from the business or activity of owning and maintaining of horse races. So there is no income as such, so this cannot be set off. This should be carried forward for 4 assessment years before it can be set off. So this 4,600 should be carried forward. So now let's look at the income from salary, which is 12,000. Income from house property is nil. Income from capital gains is also nil. Business income also is nil. However, income from other sources is 60,000 rupees. If you look, the total income is 12,000 plus 60,000 is 72,000. 72,000. So this is the gross total income of the assessee. So hope you understood the problem, and please remember very important uh, very important rule. So you can ask me a question, sir, there is an income of 60,000 rupees from income from other source. So if there is a income from other source, and the two winnings from card games and bettings, this winnings cannot be utilized as a means to set off any other income, any other loss. So no loss can be set off against this one. Hope you have understood. If you have any doubts, you can get back to me on my WhatsApp number. Let's take the third problem, which is similar to that of second problem. Very important problem. Let's discuss the third problem. So the third problem, the assessee furnishes the following information. The information is as follows. Income from salary is 2,62,000. Income from securities, interest on securities, this is income from other source of 2,000 rupees. There are three house properties and he has made some profits from first house property and loss from second house property and loss from third house property. In the fourth, in the heading, under the heading profits and gains from businesses, business or profession, it is found that business 1, business 2, business 3, business 4, the following incomes were generated and loss were incurred. He has even got some capital gains, short-term capital loss and long-term capital gain, and he has income from other sources in the form of income from card gains and bettings, and loss from maintaining of horses and income from maintaining of horses. So with this data, you have to find out the income of the assessee and amount of tax he has to pay. In the previous case, as the income was 72,000 only, and as per the income tax slabs, up to 2.5 years, there is no tax for a person below the age of 60, and hence the tax liability is zero in the previous case. I forgot to take up that particular part for the discussion. Next one, let's solve this problem. The income from salary is 2,62,000. So this is the first one, number one. Number two is income from interest on security. This is income from other source. So this is income from other source. Under the heading, income from other source. Number two. Number three is income from house property. So this is first one. This is the first one. Income from house property. This is the income from house property solution. So income from house property is 12,000 minus 2,20,000 and minus 10,000. All put together is 2,08,000 is the loss. As discussed in the previous problem, that loss from a house property to the tune of 2 lakhs can be set off against income from salary. So let's set off this 2 lakh rupees of a loss out of 2 lakh 80,000 loss against salary income. So if you set off 2 lakh rupees against, that is the house property loss, so you are eligible for only setting off loss from the house property from any income to the tune of only 2 lakh rupees from specified incomes, allowed incomes. So in this case, 2 lakhs is set off. So you had previously income from salary of 2,62,000. However, after setting off loss from house property to the maximum eligible of 2 lakh rupees, income from salary becomes 62,000. Now, number three step, income from house property was 2,80,000, which was a loss. However, you have set off 2 lakh rupees. So the remaining amount of loss which could not be set off can be carried forward for the next years. For the next years up to 8 assessment years before it could be set off. Hope you have understood this point. So income from salary is over, income from house property is over. Now let's talk about income from profits and gains of business or profession. So number one. So business number one, there is a income. There's a income from non-speculative business of 6 lakh rupees and business income from speculative non-speculative business, which is a loss of 12,000 rupees. This loss of non-speculative business can be set off against non-speculative profits of 16,000 rupees. So he has to pay. Income from speculative non-speculative business is 4,000 rupees. Next one. Next one is speculative business, non-speculative business loss and speculative business income. Speculative business loss was 64,000 and speculative business income was 36,000. Please remember, speculative business loss can be set off against speculative business profits only. So this loss of 64,000 can be set off against similar income of 36,000, but it could not be set off full amount. In this case, it can be set off only 36,000, and out of this 64,000 loss, after deducting 36,000 or setting off, the remaining amount which could not be set off is 28,000. This can be carried forward for 4 assessment years. So this 28,000 can be carried forward for 4 assessment years. So this is over. Now you can ask me a question, sir. Can okay. So So this is an point which is discussed. Now let's talk about capital gains. Capital gains, there is a short-term capital gain of loss of 60,000 rupees and long-term capital gain of 54,000 rupees. So this is the calculation under the heading income from capital gain. The rule says that short-term capital gain can be set off against short-term capital loss can be set off against short-term capital gain and as well as long-term capital gain, and long-term capital loss can be set off against long-term capital gain only. So short-term capital loss is 60,000, which can be set off against long-term capital gain of 54,000. So out of this 60,000 loss, I can set off only 54,000 because my long-term capital gain is only 54,000. So this is the one which should be carried forward and set off in the future in 8 assessment years. These are the rules which you have to remember. So income from capital gains is 0. Next one is income from other source. Interest on securities is 2,000 rupees. Hope you are aware that there is an income in the form of interest on securities, 2,000 rupees, which is fully taxable. Income from card games and bettings is 60,000 rupees. Loss from maintaining of horses is 46,000 rupees, and similar profit was 20,000. This loss of 46,000 can be set off against this profit, and the remaining unabsorbed loss can be carried forward for 4 assessment years. So this can be carried forward for 4 assessment years. So now you can ask me, sir, there is a speculative loss of 28,000 rupees. Can I set off against this? Against this, no. Please remember, speculative business loss cannot be set off against any other income. Rather, it should be set off against similar income, which is speculative business income only. Hope you have understood this particular problem. Hope you have understood this problem. So let's take the fifth problem and probably the last problem of the day. And hope this will be useful session for all of you. Let's take the fifth problem. And this particular fifth problem is the one which has only income from other sources. It doesn't have income from salary or income from house property or profits and gains from business or profession or capital gains. So please remember, there is a separate video which session which I have dedicated, and that video is uploaded on YouTube, and that is which are the items which fall under the category of income from the last source, which is the final source. So you can please visit my YouTube and view the video on income from other source. So all these items, please remember, which are shown in this particular numerical problem are income from other source. Let's take up the problem. So this person is a director, and directors meeting fees received from Y Limited. So is rupees 3,000. This is income from other source. Agriculture income from a land situated in India. He has a agricultural land in India, and there is a income to the tune of 10,000. This is also income from other source. Agriculture income from Nepal. Now he has got a piece of land in Nepal also, and from that agriculture land in Nepal, he had made a income of 15,000 rupees. He has made some investments in banks, post office savings account, Government of India securities, public provident fund, and national savings certificate. And the interest what he has earned on bank deposits is 10,800 after this is net. Net means after deduction of tax at source. Post office savings account, he has earned interest of 6,000 rupees. On Government of India securities, he has earned interest of 12,000 rupees. On public provident fund, he made an interest of 4,000 rupees. And on national savings certificate 8th issue, he has generated or earned interest income of 3,000 rupees. And similarly, he has got some dividend uh, from A Limited on 25th August 2019, and this dividend income is rupees 8,000. Lottery, he has won a lottery of, and after deduction of tax at source, he has made a income of 28,000 rupees. Next one is income from subletting, income from subletting, income from subletting. If you look at this, Rent from subletting of a plot is 12,000 rupees. And rent paid to the landlord for the flat is rupees 4,000, 6,000 rupees. So please remember there are certain rules to be followed to solve the problem. Let's solve the problem. Next, first one, director's fees, meeting fees is fully taxable under income from other source. Income from which is 3,000 rupees. Agriculture income from a land situated in India. If any agriculture income is there any income is generated from a agriculture land situated in India, it is fully exempted from tax. So this is the rule. Agriculture income from a land situated in India is fully taxable. However, agriculture income is there, and that land agriculture is income is there from a land from which is there in different part of the country, different part of the world apart from India, and he has generated income from that land which is not in India. In this case, he has agriculture land in Nepal, and he has generated agriculture income of 15,000 rupees. So this is fully taxable. Number two. Number three is interest income. So interest income on fixed deposit. So this guy has invested in bank FD, and he has made earned a interest income of 10,800 rupees after deduction of tax at source. After deduction of tax at source. Please remember, I'm going to upload a video on the topic tax deduction at source, so you can get a huge amount of information on tax deduction at source from that particular video which I am going to upload. So however, let's solve the problem from in this particular case, which is interest on amount deposited in bank in fixed deposits. So in this case, after deduction of tax at source, he has earned a interest income of 10,800. Please remember the tax which will be deducted at source on deposit interest on fixed deposits from bank is 10%. Means after for example, he has earned 100 rupees interest. So they will deduct, for example, 10%, that is 10 rupees, and they will give 90 rupees. So in this case, 90% is equal to 10,800. So what is the total income he has earned in the form of interest from bank on fixed deposits is, if you want to find out that, you have to just do these calculations. When 90% is 10,800, so what is the full amount? This is 100%. So just cross multiply 100 into 10,800 by 900 by 900. So if you solve the problem, you will get it is 12,000 rupees. It is 12,000 rupees. When again I'm showing you for your better understanding. In this case, the tax deducted source is 10 percentage, so 90% is getting, and 90% is equal to 10,800. So what is 100%? So you have to just cross multiply 100 into 10,800 by 90. So if you calculate, you will get, this is the 9 12, you will get 12,000 rupees. You will get 12,000 rupees. So this is what I have placed. 12,000 rupees is the income he has earned from interest on fixed deposits in from bank fixed deposits. Please remember this the tax which is deducted now is 1,200 rupees. That is 12,000 minus 10,800. Now when we compute when we compute the total taxable tax payable, so if it is for example 20,000 rupees, from that he can deduct this 1,200 rupees and the remaining he can pay, because already tax is deducted on this particular income. Now, income from post office savings schemes, it is given up to, there is a note. This figures may change from time to time, from financial year to financial year, and just you have to update yourself. So in this case, for the financial year 1920, the maximum amount which is exempted from tax is 3500. So in this case is only 600. So it is fully exempted. In the same way, interest on government of India securities is fully taxable. PPF, he has invested some amount in PPF, and on this PPF there is a interest earned which is to the tune of 4000 rupees, which is also, the rule is it is fully exempted from tax. PPF interest. Interest on savings, national savings certificate 8th issue is 3000 rupees. This is also fully taxable. So you have to remember the rules. This particular subject is primarily rules and rules only. There is nothing apart from that. Next one is dividend from A Limited. As I told in my previous numerical problem, that any dividend income of less than 10 lakh rupees for the year by the assessee is fully exempted, and over and above 10 lakhs is fully taxable. This is for the assessment year 2019-20, financial year 1920. But however, for assessment year 21-22 or financial year 2021, it is fully taxable from zero onwards, zero income onwards. So in this case, as is total income from dividend is less than 10 lakh rupees, it is fully exempted. Next one is lottery income. Lottery income. Let's talk about lottery income. Now, the same way what we did for interest on fixed deposits from bank, so the similar way we have to calculate. So in this case, he has earned he has earned 28,000 rupees from winnings after tax deducted at source. And the tax which is deducted at source in case of winnings from lotteries is 30%. Means he gets in hand 70%, and that 70% is equal to 28,000 rupees. So what is the full amount, which is 100%? So how much is 100%? So how to calculate 100%? Cross multiply. You have to just cross multiply 100% into 28,000 divided by 70 is equal to, if you calculate this, you will get 40,000 rupees. So on this 40,000 rupees, 30% is tax which is deducted, and the remaining will be placed in the hands of the winner. So this 12,000 already you have paid. Please remember that you can ask for refund if the income tax is zero, or you can deduct if you have to pay the income tax, that amount. So 12,000 rupees. So the total winnings from lotteries is 40,000 rupees. Hope you understood this. So last point of the day, and under the head income from other source, and this is very important. Please pay attention and let's solve the problem. The problem goes like this. Now, Mr. This particular person has got a rent from subletting of a flat, on which he has paid to the landlord a rent of 6,000 rupees. So he has got an income from subletting of 12,000 rupees, and he has paid to the landlord 6,000 rupees, and eventually he made a profit of of a, sorry, this is 6,600 of 5,400, which is income from other source. So let's talk about what is subletting. So there are three persons in this particular example, A, B, C. B has taken a house from A, and he in turn B sublets it out to C. So for example, this is a big house like this. This can be divided to two portions. So B has taken this house on rent from A. Okay, the total house rent is some 20,000 rupees. So for this portion it is 10,000 rupees. For this portion it is 10,000 rupees. Now this guy occupies, B occupies only this part, and the remaining part he sublets to C. And from C he takes 15,000 rupees. Now this is the income in the hands of B from subletting. But however, please remember that he is paying rent to this part also, to this part also, and this part he is paying 10,000 rupees. So he can claim a expenditure or a deduction. So 10,000 rupees he can deduct from this income, and the income from subletting is 5,000 rupees. So that is a natural common phenomenon you have to adopt. So in this case, 12,000 was the income from subletting, and the rent what he paid for subletting to the tenant to the owner was 6,600. So the total income from subletting is 12,000 minus 6,600 is 5,400. This is also income from other source which is fully taxable. So these are all the income from other source. If you add, you will get 79,600. So now please remember, this is very important point what I'm sharing with you. As already told that if the income is between 0 to 2.5 lakhs, you need not pay tax because the tax is to the tune of only up to 2.5 lakhs, the tax is zero. However, this guy has paid on this particular transaction, as already discussed, 1200 rupees. So he can ask for refund. He can file income tax returns. He can file and he can uh, get a refund of 1200 rupees. However, as far as winnings is concerned, this winnings of 12,000 rupees, the tax deducted source, he will not get the refund because it is according to the rules, it is not uh, permitted. So hope this session was fruitful to you. If you have any doubts, you can get back to me on my WhatsApp number, and I will be there to help you out at any time. Just just this note my WhatsApp number, and any doubts, just place it on my WhatsApp number, or there is a email ID which is shared in this particular slide, so you can have a full understanding. And thank you so much for patience listening, and hope you have benefited out of this particular session. God bless you. Best of luck. Stay safe, stay happy, keep smiling.